Hey guys, today we're diving into a powerful trading tool that transforms what if into I was certain, and that tool is backtesting. Backtesting is an essential element in any trading journey, yet a lot of traders often execute it the wrong way. So in this video, we'll break down what backtesting actually is and why it's important, how to properly implement it on your charts to extract the most precise data, and introduce one of the top tools for efficient and high-quality backtests. If that sounds useful to you, don't forget to hit the like button to show your support and subscribe to our channel. We regularly share advanced trading insights. Let's begin with the fundamentals. What exactly is backtesting? Backtesting is essentially the process of running your trading strategy on historical data to determine if it holds up. But it's not just about pulling up a chart, identifying order blocks, and making loose trade assumptions. That's an incorrect method and won't deliver consistent results. The issue with that style is, when scanning past charts, your brain tends to highlight trades that would have been successful, overlooking many of the losing setups you'd face in real-time conditions. In this video, we'll guide you through the correct backtesting process so you can achieve the most realistic outcomes. But first, why is backtesting important in the first place, and what advantages does it offer? Backtesting allows you to evaluate how a strategy might have played out historically without putting your capital at risk. It enables you to validate your concepts using previous market data to determine which setups are effective and which ones fail. Here are the main advantages of backtesting: gaining insight into your strategy's performance without putting money on the line, boosting confidence to execute your setup when real opportunities arise, fine-tuning your approach by identifying what's effective and optimizing what isn't, saving valuable time by testing concepts on historical data instead of waiting for months, and recognizing market behavior patterns through past data analysis. However, backtesting does come with a few limitations. It doesn't factor in emotional decision-making, trading fees, or the reality that a strategy might perform well on historical data but fail under live market conditions. However, here's a backtesting method that can help you produce the most accurate results. Start by using a trading setup with clear, rule-based criteria that aren't swayed by emotions. Stick to these rules during backtesting exactly as you would in live trading. For instance, if you're a session trader who operates only during the London session, make sure to include that in your backtesting. Only consider trades within that specific time window. The second, and arguably most crucial, point is to prevent yourself from seeing upcoming price action while backtesting. This allows you to generate results that are more realistic and closely resemble live trading conditions. To achieve this, you can press the right arrow key on your keyboard to advance one candle at a time through historical data. Just be cautious. Zooming in or out, or changing timeframes, can shift the chart and disrupt your entire backtesting workflow. That said, it's best to use platforms that provide a replay mode to get the most realistic data, so today we're going to talk about a platform that offers many backtesting features. Let's hit play to begin the backtest. We're now in replay mode. Once I click the play button, you'll notice the price starting to move. You can control the playback speed or use these icons to move forward or backward by one candle on the chart. From the Indicators tab, you can add any tools you need. For instance, if I search for and select trading sessions, they'll be displayed on the chart. But for now, let's turn those sessions off using the top left menu. From here, we can place a buy or sell order with a chosen lot size. Let's set the lot size to 1 and execute a sell order. As the chart progresses, you'll see your current profit or loss, just like in a live market environment. To close the trade, go to the bottom left section and click on Open Positions. Here, you can exit the trade. Afterward, your performance data, including account balance and trades, will be visible under the History tab. The chart will also highlight your entry and exit points. This platform additionally provides access to economic news and various tools to ensure your backtest results are as accurate and realistic as possible. You can either download the desktop version or use the web-based platform. If you're interested in exploring it, check the link in the description and enjoy a 5% discount using our promo code. Now, let's begin backtesting the order block trading strategy. Using the Forex Tester Online platform, this straightforward strategy involves identifying order blocks on the higher time frame. When price taps into one of these order blocks, we'll switch to the entry time frame, look for confirmation, and then place our trades accordingly. We're now looking at the EUR/USD chart on the 15-minute time frame. The overall trend is bearish, so we'll focus only on short setups. Let's press play and begin marking 15-minute order blocks as price progresses. At this point, we notice a fair value gap, so we highlight the candle that formed this gap as our order block zone. The plan is to wait for price to retrace into this order block and then look for short entries. Since the zone is fairly wide, we'll switch to the 1-minute chart to find confirmation and secure a better entry point. Now that price has reached the order block zone, let's move over to the 1-minute chart. On this chart, price is currently trending upward, but we're aware this move is temporary since the higher time frame shows a bearish trend. We'll wait for a change of character to confirm a potential reversal. This shift is confirmed once price breaks below this key level. At this stage, we mark the newly formed 1-minute order blocks and place a sell limit. If you observe the chart closely, you'll see this candle has created a small fair value gap, so we identify it as an order block. We'll position our sell limit at this zone and set the stop loss above the recent swing high. For the take profit target, we'll aim for the candle closes near the double bottom. If this setup plays out, it offers a strong risk to reward ratio. Let's see the outcome. The price has activated our trade and formed another bearish order block. Without closing the initial trade, we place an additional sell limit at this newly formed order block. The price has now reached our target, but we're not finished yet. Our higher time frame target remains this key turning point right here. Since price hasn't reached that level yet, we can continue identifying fresh order blocks and look for more short trade opportunities. Here's a fresh order block, so we'll mark it and place a sell limit. Now let's press play. You'll notice the price has formed a liquidity zone, which suggests it could break above this area to collect liquidity, tap into our order, and then potentially reverse downward. Let's watch how it plays out. Unfortunately, while the price briefly responded to the order block, it eventually hit our stop loss because of strong bullish pressure. So, we'll go ahead and cancel this setup. Let's break down the second trade and review our performance in the trade history. So far, we've had one profitable trade with a risk-to-reward ratio above 1:2, one trade that hit stop loss, and one break-even setup. This was just a demonstration to show you the full backtesting process and how we execute trades step by step. This method helps generate dependable data for refining your trading strategy, especially with the robust tools provided by the Forex Tester platform. Whether you go for this software or a different backtesting tool, consider it a smart investment. To summarize, backtesting is a crucial element of becoming consistently profitable. Sadly, many retail traders treat the markets like entertainment, chasing wins and enjoying the ride, even when losing. But serious traders approach it like a business, analyzing systems and using backtesting to sharpen their edge. Thank you for watching. So team, I hope you gained something valuable from this session. If you did, hit that like button and don't forget to subscribe to help us bring you more advanced content, and we'll catch you in the next one.